Are you tired of feeling like you're drowning in bills and expenses with no end in sight? Trust me, I've been there. But what if I told you there's a way to break free from the cycle of financial stress and achieve true independence? Today, we're diving into the world of personal finance to explore a game-changing strategy, living off dividends. So grab a seat because we're about to uncover the secrets to financial freedom that no one tells you about. When it comes to generating passive income, the options seem endless. From owning rental properties to writing best-selling books, there's no shortage of ideas floating around. But let's be real for a moment. While these strategies can be lucrative, they often come with their fair share of challenges. Take owning rental properties, for example. Sure, the idea of earning rental income sounds appealing, but the reality is, it's not all sunshine and rainbows. From dealing with tenant complaints to handling property maintenance, being a landlord can quickly become a full-time job in itself. And let's not forget about the world of blogging. While it's true that some bloggers have found massive success, building an audience and monetizing a blog takes time, often years, of consistent effort and dedication. It's certainly not a quick fix for financial woes. And as for writing a book, well, let's just say it's not as simple as putting pen to paper and watching the royalties roll in. With millions of books published each year, standing out from the crowd can feel like an uphill battle. But fear not, because amidst all these challenges, there's one passive income option that stands out above the rest: living off dividends. One of the biggest misconceptions surrounding living off dividends is the staggering amount of money believed to be necessary to retire early. You've probably come across articles and videos proclaiming that you need millions of dollars in your investment portfolio to even consider early retirement. And let's face it, these numbers can be incredibly discouraging, especially for those of us who don't have a hefty savings account to fall back on. But here's the truth. While it's true that having a substantial nest egg can make early retirement more attainable, it's not the only path to financial independence. The idea that you need millions of dollars saved up in stocks to retire comfortably is simply a myth perpetuated by conventional wisdom. And let's not forget about the daunting task of predicting future market returns and navigating the ups and downs of the stock market. With so much conflicting financial advice out there, it's easy to feel overwhelmed and unsure of where to start. Let's take a closer look at traditional dividend stocks and examine the investment required to live off dividends. Traditional dividend stocks, such as Johnson & Johnson, have long been favored by investors seeking steady income streams. These companies typically have a history of consistent dividend payments and are considered stable investments. But here's the catch. While investing in these blue-chip stocks can provide reliable dividends, the amount of capital required to generate enough income for financial independence can be daunting. Let's take Johnson & Johnson again. Their last quarterly dividend was $1.19 per share. To make $4,000 a month or $12,000 a quarter, you need to divide $12,000 by $1.19, which is a little more than 10,084 shares. At the current price of $161.23, you need over $1.6 million invested. The traditional dividend growth strategy requires patience and a long-term outlook. It can take decades of consistent investing to accumulate enough shares to live off dividends comfortably. And let's not forget about the inherent risks associated with relying solely on a handful of individual stocks for income. Stock prices can fluctuate, and companies can cut or suspend dividend payments, leaving investors in a precarious position. Don't let that hold you back, though. Let's explore some high-yielding alternatives that may offer a more attainable path to financial independence. High-yield dividend stocks, such as Realty Income and Altria, often appeal to investors seeking higher income potential. These companies typically offer dividend yields that exceed the average of traditional blue-chip stocks. Take Realty Income, for example. It is a real estate investment trust and is mandated by the government to pay out 90% of its taxable profits as dividends. This results in a dividend yield that outpaces many consumer staple stocks. Similarly, Altria, known for its tobacco and alcohol products, offers a generous dividend yield that may appeal to income-focused investors. But remember, relying solely on one or two high-yield stocks lacks diversification and leaves you vulnerable to downturns in specific sectors or industries. That said, high-yield dividend stocks can still play a valuable role in an investment portfolio, providing an attractive income stream for those willing to accept the associated risks, especially when part of a diversified portfolio. It's time to introduce you to an innovative investment strategy that combines the benefits of diversification with additional income potential: covered call exchange traded funds. Covered call ETFs, also known as option income funds, are a type of ETF that employs a strategy involving both stock ownership and options trading. These funds typically hold a portfolio of stocks while simultaneously selling call options against those stocks. The sale of call options generates additional income for the fund, which is then passed on to investors in the form of dividends. This allows investors to benefit from both dividend payments and option premiums, potentially enhancing overall returns. When an investor purchases shares of a covered call ETF, they effectively gain exposure to a diversified portfolio of stocks similar to a traditional ETF. At the same time, the fund's managers sell call options on some or all of the stocks in the portfolio. These call options give the buyer the right to purchase the underlying stocks at a predetermined price within a specified time frame. If the stock price remains below that predetermined price until the specified time frame is reached, the call options expire and the fund retains the premiums collected from selling the options. This premium income is then distributed to investors as dividends. Now let's dive into some practical investment strategies that you can implement to build a robust dividend portfolio. One of the most fundamental strategies for dividend investing is dividend reinvestment. Instead of pocketing the dividend payments as cash, consider reinvesting them back into the same stocks or ETFs that generated them. This allows you to harness the power of compounding and accelerate the growth of your investment portfolio over time. Many brokerage platforms offer automatic dividend reinvestment, making it easy to reinvest your dividends without any additional effort on your part. By continuously reinvesting your dividends, you can steadily increase your ownership stake in dividend-paying companies and maximize your long-term returns. Portfolio diversification is also key. Instead of putting all your eggs in one basket, spread your investments across a diverse range of sectors, industries, and asset classes. This helps mitigate risk and ensures that your investment portfolio remains resilient in the face of market volatility. When selecting high-yield dividend stocks, focus on companies with strong fundamentals, sustainable dividend payouts, and a history of consistent dividend growth. Look for companies with low debt levels, stable cash flows, and a proven track record of weathering economic downturns. The key to successful dividend investing is patience, discipline, and a long-term perspective. Stay focused on your investment goals, stick to your investment strategy, and don't let short-term market fluctuations derail your plans. To truly leverage the insights shared about high-yield dividend stocks, be sure to watch this video. We'll go into advanced strategies for identifying, evaluating, and investing in companies with attractive dividend yields. Click on the video and elevate your dividend investing journey to the next level.